It gives me great pleasure to welcome Sanjeev Gupta on NDTV today. Mr. Gupta, many thanks for joining us. We've talked in recent months, but it was always over the phone, so it's great to do this on camera. Great to have you on NDTV. You know, in the past year, the Liberty House Group has spent over $600 million on acquisitions. Can you describe your acquisition strategy and goals so far?
So most of our acquisitions in the last couple of years have been in the UK. So for the UK, we have defined what we call our green steel or green metal strategy, which is based around collecting UK steel scrap, processing it, turning it into liquid steel, turning that into steel products, then putting as much of that as possible into downstream value-added engineering products, all done using our own renewable energy and with the aid of our new financial services arm. So this is a circular plan. Basically, UK has an excess supply of steel scrap. It's the largest exporter per capita of scrap in the world. It's effectively the least recycling country in the world. But we have a growing mountain of scrap because steel cycle in the UK is come to the development stage where we have almost 1 billion tons of steel accumulated in the country. Most of it or all of it has to be recycled over time, and there is more and more generation of this. So our strategy is underpinned by that raw material, if you like.
Okay, so you've given us a taste of your acquisition goals and your green steel vision. But I want to stick with acquisitions for a moment. Is there room for more acquisitions in this strategy?
So again, we have defined our 5-year plan. The 5-year plan is that we want to reach 5 million tons of liquid steel in the UK from scrap, which means that either we have to, within that we have 2 pillars already. We have the Rotherham plants, which we have acquired from Tata, and in Newport we have a site which is a rolling mill, which had historically a 2 million ton arc furnace, so we're looking to revamp that. So that puts us 3 out of 5. There's 2 million tons more to do. That will either be greenfield, brownfield acquisitions, something along those lines. That's on the steel side. Then on the downstream side, there is plenty of room to expand, because today UK industry is 10% of its economy, down from 30%, and there is going to be a change in this. There is going to be an increase for sure over the years to come in UK industry, which means, for example, if you look at the automotive sector, UK produces almost 2 million cars today, which is set to rise. Most of the supply chain for this, more than half the supply chain for this, is imported today. Balance 40%, which is made locally, we are a big participant in. We are amongst the largest suppliers to the OEMs. But we're looking to add capacity. Again, as an example, we are building our aluminum alloy wheels factory. Similarly, other projects will be either acquired or built from scratch.
Okay, and I just wanted to flesh that out a little bit more. Can you share some more downstream examples which really underpin your downstream acquisition strategy?
I think the best example actually is the alloy wheel factory, which I mentioned. As you know, we bought from Rio Tinto the only aluminium smelter in the UK in Scotland. So that liquid aluminium we are going to be using to make alloy wheels. UK does not make any wheels at the moment. So 2 million cars, very simply, is 8 million wheels. And all of these wheels are today imported. So we will look to plug that supply chain gap by setting up a factory in Scotland next to our smelter, which will start making alloy wheels for the automotive sector in the UK. So that's one very good example. There are plenty more like this. Forgings, for example, UK forging industry is all but gone. So there is an opportunity to reshore some of that back into the UK. And there's plenty more examples like that. More than half, as I said, more than half of the supply chain on automotive is currently imported. Similarly, in all other industries also. Over time, the UK has lost a lot of its production, which it has an opportunity to regain.
What's interesting to note is your acquisition targets now extend, they've gone beyond the United Kingdom. They extend to Australia, the United States. I wanted to understand how you're plotting your plans outside of the UK.
So we have a large concentration in the UK on our industrial businesses, as is evident by our activity over the last few years. We would like to diversify a little bit and have interest in a few other markets. And we're choosing the ones which are naturally aligned in terms of bandwidth. So as you can again see, Australia, US, and so on are Anglophile countries. So we can handle those environments more easily with the management teams which are already in place. Our management team has grown very impressively. We have some amazing people in the team. So we can use those to increase our business in those markets as well now.
You know, this kind of rapid growth, it implies a need for capital, and you've talked of a potential partial listing for Liberty House Group. So, you know, what would be the rationale behind the listing?
Rationale, as you have correctly first of all pointed out, is that every business which is growing should look at its capital structure and look at capital opportunities. So first and foremost, we want to be prepared for this. We don't have a specific need or plan for raising equity at this stage, but we are a growing group. We have a lot of opportunities, and at some point it may be useful to have access to the capital market. So part of the ambition is part of the reason why we want to get into the market in the short term is to be prepared for something bigger in the future if it comes or is needed. The other motivation is that we want our business to be as transparent as possible. It's again a business which has many strands. It can seem complex. So the more governance, the more transparency we can bring into the business, the better it is internally and externally. And accessing public markets in one way or another obviously instills a certain discipline, a certain governance on the business, which is desirable.
Fair enough. You've said in recent media interviews, partial listing of the business. So what do you mean when you say partial listing?
So if you look at our the range of the businesses we're in steel, we're in aluminium, we are in cement, we are in power, we are in renewable power, we are in banking, we are in engineering, auto components. So they are very diverse. I mean, they're all linked. They're all part of our overall strategy. But from a market perspective, that is quite a complex basket. So out of that basket, certain businesses will be more suited, will be better suited for the public markets. Like the engineering business, for example, perhaps is better suited. The finance business perhaps is better suited. The renewable energy business perhaps is better suited. Steel, at least in the UK, perhaps is not better suited because it's not well understood. Maybe steel is better suited in the US. So what I'm trying to say is that each business is being examined in detail. The overall business is also being examined, but the likelihood is that our first steps will be to choose one or two of the segments we're in and one or two specific markets to list them in.
Oh, okay. That certainly gives us a fair bit to track. You know, the headlines that you made in India centered around the engagement with Tata Steel, most recently the acquisition of Tata Steel's specialty steel business in the UK. We've talked about this in the past, but I do want to revisit it today. Just reflect a little bit on the value of that acquisition.
So we very much regard that as the jewel in the crown amongst the Tata businesses in the UK. It is a business, first of all, which is entirely aligned with our green steel strategy in the sense that it has 2 arc furnaces. There's only one other plant effectively of scale which has the arc furnaces in the UK. So we have the lion's share of the arc furnace market now in the UK, which gives us a head start on our remelting green steel strategy. Then more importantly, or equally importantly, it produces steel for high-end applications such as aerospace, oil and gas, engineering, and so on, which would tie in very nicely with our desire to plug the gap on the supply chain in these industries. So now, not only do we have the engineering expertise downstream to expand and grow that business, we also have the raw material in-house to supply into that segment. So it fits in from all angles of our business.
I have to say, I've become fairly familiar with your green steel vision for the UK, but some of our viewers may not be that familiar. So I'm going to ask you once again to describe that green steel vision.
So green steel means, in one sentence, it means recycling steel rather than making primary steel from iron ore and coal. It means using existing steel in the system and recycling it, and using renewable energy rather than, again, carbon-based energy to recycle. And this green steel strategy very much is relevant to economies where the steel cycle has matured. Again, what that means is that you've accumulated so much steel in your system. There's almost 1 billion tons in the UK, which has to be recycled. Steel is not a perishable commodity, as we all know. It doesn't disappear. It has to eventually be recycled. It has a life, and when it reaches end of life, it has to be recycled. So when a steel economy or economy comes to its maturity on the steel cycle, it will generate more and more and more steel scrap. US is in this situation. UK is now increasing its scrap of steel scrap. It will go from 10 million tons currently generated to 20 million tons over the next 10-15 years. Already out of the existing 10 million tons, 80% is exported. So there is plenty of raw material domestically available at competitive pricing, and which is also ecologically friendly.
But there must be some challenges in executing this vision. So what are they?
Of course, every business has its own set of challenges. We have some unique challenges. Our biggest unique challenge is that the power market in the UK, the way the policy framework has been set up, means that industry pays for very expensive power, which makes, and of course our biggest raw material in recycling is power, so that makes, that gives us an uncompetitive proposition. But we have lobbied to solve that, because this is an unfair tax on UK industry. But more importantly, we have taken our own steps. So we have set up, for example, we have set up regeneration plants in all our industries, in all our major industrial locations. We have set up gensets which are using waste oil. They're using fish oil, tallow, all kinds of animal and fish fat and so on, which gets renewable support from the government. So that makes us, for example, our steel plant in Newport is run on fish oil. So probably the only steel plant in the world which is run on fish oil, which makes it even more green. And more importantly, it reduces our power cost substantially.
It's quite intriguing that the Liberty House Group is finding value in businesses where large conglomerates, really large conglomerates, have had a couple of missteps. What are you doing differently? What is differentiating your approach? So first point, a macro point to say is that this is not the first time this happens in history. There's often a situation where circumstances change and new entrants are able to take and move with them much better than older players. There are many, many, many reasons why that happens. And there are great success stories of our business model. It's not that we are inventing the wheel. I mean, if you look at the US, there's a couple of very good examples. If you look at Nucor and you look at Steel Dynamics, they are already doing this at a very decent scale and very successfully. And the market is rewarding them both in terms of their profitability and their valuations. They're both listed companies. So there is clear evidence of this business model working very well. And the other thing to remember is that the situation in the UK has turned for two very important but very different reasons. One is that UK has been very focused on its services sector over the last 30-40 years, which has seen its industry share of GDP drop from 30% to 10%. So this is because on the other side, the services sector has been very successful. As we know, London is one of the best financial centers in the world, and that has really contributed very nicely to the UK economy. So, but now we see a rebalancing. After things like Brexit, just a general desire for industry to have another go. So we see a rebalancing of the sectors. We see new opportunity in the industrial sector. This is one. And the second thing I talked about earlier was the steel cycle. We see more and more steel scrap generation in the country, which means there is more opportunity to recycle. And we see power prices being addressed. They're not entirely solved yet. Still, power prices in the UK are much higher than Europe, but they are being addressed. It is a center of focus, and I do believe that either through government action or private company actions like we're doing, power prices will come down. This combination gives rise to a lot of opportunity. One element, which is workers, their benefits, past benefits, future benefits. What are your thoughts on how to handle that?
So the first point is, I think every problem has a solution, if there is a will. And today there is a will. So if you talk about trade unions, people criticize British trade unions as being a problem. I tell you, for us, they have been our biggest asset in all these processes. So without the help of and without the partnership with the trade unions, we wouldn't have done many of the deals we did. So they all understand the need now for change, and that if there is a unsustainable cost base in a certain situation, that has to be addressed and is being addressed. Now, that is a general point. The specific point I wanted to make was that so far the businesses we have bought, including, for example, Tata's business, we did not buy with any legacy. So we were fortunate because, again, we were an entrant, and when we were buying things out of distress, we had the opportunity to dictate terms or to at least negotiate terms which were favorable for the business, making it more sustainable. So we did not get any of the legacy costs. That is not to say that we are scared by legacy. I mean, if there are situations where there is legacy which needs to be addressed, we will address it. We will address it in partnership with the stakeholders, most important of them being the workers and the trade unions. We have a great relationship with our colleagues. We have 5,000 of them now in the UK, and that is actually our proudest asset out of all the things we have done in the UK. So that is the third thing I was going to say was that, so one is that there are, at least for us, we have not had to address these legacy issues. Second is that there are solutions to these legacy issues. And the third thing is that these problems are often blamed for larger issues. So let's say lack of investment or lack of innovation or anything which is there's plenty of reasons why businesses don't progress, but often one ends up blaming the easiest thing to blame, which is things like unions or government or this or that, which is not always the true reflection of the reality.
Okay, you're clearly in fourth gear. Now that you are in fourth gear, how vulnerable are you to the vagaries of the steel sector? Also, how do you see the prospects for steel, both in terms of demand and price?
So again, there is a very two different answers to this question. What do I think about the steel price or the steel market? I think we have challenges ahead of us. There is a respite at the moment. Steel prices recently recovered for no particular reason, no fundamental reason. I am fundamentally of the belief that we will see challenging times again in not too distant a future on steel everywhere in the world. But our model is to a large degree isolated from this, because it is based on domestic scrap, which is, so first of all, it doesn't have long chain supply. We don't have to carry a lot of inventory if you're collecting scrap domestically. Secondly, so you don't have to carry price risk. You don't have to carry inventory. Secondly, you are making the steel and selling it domestically. So your raw material is local, your sale is local. You are basically looking after your spread, which is fairly consistent in the recycling business. So this business is immune from the commodity cycle which steel has to suffer. And again, I point to the examples in the US, like Nucor and Steel Dynamics. You can see, if you monitor their performance, they have performed irrespective of the pressures on steel or the cycle the steel is going through.
What do you make of India's steel sector? How does it stack up based on what you see globally?
Look, I'm not an expert on Indian steel, but I will try to answer your question. My view is that the biggest challenge that India has on sectors like steel is the debt burden which these businesses carry. The debt servicing cost in India is very, very high. It's a huge multiple of what it is in the West. So when you're talking about double-digit servicing cost, and you're talking about short-dated debt for long-dated assets. So you have assets which have a life of 30 years, 50 years longer, but you have debt which is much shorter. This has been some of the structural problems in the Indian debt market. Some of that has been addressed, but in the meantime, these companies have accumulated huge mountains of debt. So, I mean, this is going to be a serious problem, and this is a serious problem for an investor also, because even if you restructure debt, even if you do things, still what you're left with is very, very large debt in these businesses. Whereas if you compare it to our businesses in the UK, we have no debt. We have not taken any long-term debt to date in any of our businesses. That you cannot do because there is no process for companies going into liquidation or coming out of it. There is a lot of structural issues in the Indian capital debt markets which make business in this sector very difficult. In terms of innovation, I think India has amongst the best steel plants in the world. We have great entrepreneurs, we have great businesses, great employers, great things. But the biggest problem they all face is, on the one side, a big debt burden. On the other side, a market which has not grown as fast as was expected by everybody. So over the last 5, 7, 10 years, the Indian steel market has grown, but has not grown anywhere near what anybody expected. In the meantime, capacities were built, debt was taken on, and those burdens have increased and increased at an exponential rate.
Fair enough, valid points. But since you are visiting India, I have to ask, what brings you here? Are you in a sense, in an acquirer mode? Is there potential for acquisitions in India?
Look, this group is promoted by Indian origin family, i.e. my family. So naturally, there is always going to be a desire or inclination to try to look to do something in India. We are not exempt for that. We are very keen on doing something in India. There's no question about that. But we're at the same time very careful. There are a lot of challenges in working in India. Things are getting better and will get better, but will take time. So we are examining all our options. I am here to examine various options amongst those. And sooner or later we will end up doing something. But at this moment I cannot specify anything because we have not yet finalized any of those propositions.
Okay, so you could potentially make some acquisitions here in India, in simple terms.
I think so. I would be very pleased personally to see our family, our group do something substantial in India.
Okay, and I'm pushing ahead on that front. Your interest in India covers sort of all elements of the Liberty House Group portfolio?
It is. We are evaluating businesses in all sectors, including, for example, the financial sector. So, of our financial services business, I think there is a lot of potential in India. On engineering, of course, there's a lot of potential in India. On power, there is serious potential in India. I mean, actually, every sector which we are in, there is clear potential. It's just that equaled or surpassing the potential is also the challenges which come with it.
Okay, but is there one segment that's of more interest than others when it comes to a potential acquisition or presence in India?
No, I don't think so. I think all those segments are core segments for us. What will define the sector we enter is more the specific opportunity rather than an overriding desire to be in only one sector.
Okay, I've tried my luck. So we've got some cues about what your plans for India could be going forward. On an entirely different note, Sanjeev Gupta, what motivates you in business professionally?
So I'm sure you've heard this phrase many times before, but I mean, it's no exaggeration for me to say that it's basically in my blood. I don't remember a time when I was not doing business. I mean, I was literally from when I was a young boy, I was running around my father, my grandfather's steel plants, their bicycle plants and so on. And that's how I grew up. So I have not known any other life. This is the life I know. And, I don't look at it as a destination. It's a journey. What opportunities you get, you maximize and do the best you can and try to make the maximum difference you can. And you continue to do that as long as you can.
And is your style, is it a marked departure from predecessors in the family?
Look, everybody has their own mark, so I would say yes. I would say perhaps, I've taken a lot of inspiration from my father. A lot of the creativity in the business which is there is his inspiration and his heritage. But everybody has their own mark to make in life, and we are making our own at this stage.
Well, I'm going to leave it at that. Sanjeev Gupta, Chairman of the Liberty House Group UK, many thanks for joining us on NDTV. Good to have you and talk to you in person.
Thank you very much.